So employees fall into one of the following groups. They're either direct or they are indirect qualifying costs. The simplest way to describe this is using an example of a design engineer. So a design engineer would design something, would create the CAD drawing, possibly the cutting path for the CNC machine to make a component. This will be considered direct qualifying activity. However, once the program is passed on to the operator of that machine and he makes the component, although he's not directly involved in the R&D, he's indirectly involved in it because he needs to be there to operate the machine, which makes the component which would need subsequent testing. So those are the two key differences. Quite often, indirect activity is not recorded. So that's one of the things that we would say, actually, make sure you are putting that in the claim. It is eligible. They may not be directly involved, but they're indirectly qualifying costs. Historically, so if you've gone back through a claim with a client, certainly for the first 2 years, maybe 3 years, the allocation of employee time is usually done retrospectively with an apportionment process. We simply make a reasonable apportionment based on the competent professional at the time saying, how long do you think you spent on this project? Which would be 20%, 50%, 70%. So that's how HMRC are quite happy for you to do that. The first 2, 3, maybe 4 years, but once you're mature in the claim, you really should be showing evidence of this, evidence that these errors have been recorded in some way or another. They call it contemporaneous reporting. So after 4 years, you really should be recording them. So if you do face an inquiry and you've had no evidence of how you've arrived at these times and these costs for an employee, they will come under scrutiny and they may well be changed if you cannot argue the case. Of course, I've seen instances where employees are put through 100%. Now, people might say, well, how is that possible? Yes, in some very small cases, it is reasonable to say that person spends all of their time on a project. So it could be an advanced science project, pharmaceutical industry, something along those lines, a research and development department, where all the people are involved in one project. The project itself is the qualifying project. So they are all quite legitimately can be claimed at 100%. It's not very common, but that is perfectly acceptable. However, the said previous design engineer is working on a whole range of projects. Now, some of them aren't qualifying. So it would be fairly reasonable to assume that that person wouldn't spend 100% of the time on qualifying projects. They will be doing standard commercial drawings, standard commercial work, which was straightforward to do. So we have to take that out. So we would change it to 75%, something along those lines. The other costs that can be included for an employee is, of course, you've got the gross salary, the national insurance, and your pension contributions, which is fairly well known. Slightly less well known is that you can include reimbursed expenses. So with reimbursed expenses, if the client is involved in these activities and the employee is spending their own money in order to do that, i.e. mileage allowance, they're driving to a site and then potentially they might have to stay overnight and obviously you've got lodge and food for that, then that could qualify. However, if you've put that in the claim and you have no evidence that they've been paid this, it may well be taken out. You will ultimately need to prove that the employee has been paid for these expenses, which would ultimately mean proving that they've received them into their bank account. Believe it or not, those questions have been asked by HMRC. So if in doubt, don't put them in. If you have got evidence and you've got good records of all these costs, by all means put them in, assuming they're qualifying.